Hey, what's up guys? Welcome back to Smart Wallet and me, where financial wisdom matters. In today's video, I want to do a little introduction on moving averages and how you can use these to help you to start investing in stocks and what to look out for. So let's get right into it. Okay guys, I'm going to be using some of my notes here while I'm talking. So I'm going to be looking down while I'm talking to you guys because I want to read you what I am going to be sharing with you regarding how to invest by using these 50-day and 200-day moving averages and what they really mean. So in this stock chart for BABA, you can see that the 50-day moving average is in the purple line and the 200-day moving average is the green line. So these technical indicators can make a big difference while you are trading. Among the most popular strategies used to indicate emerging and common trends is calculating the moving average. Put simply, the moving average is a mathematical formula used to find averages using data to find trends. So if you can see here that the price would be touching the 50-day moving average and then bounce right back off of it. It touches the 50-day moving average and it bounces right back off of it. But when you look down here, there's a break in the 50-day moving average and it drops back down. And this right here is a very bearish signal for this stock. Now, am I saying that this stock is going to go down forever and it's not a good play? That's not what I'm saying. I'm just saying what the data shows on the 50-day moving average and how we should be reading this stock. So currently this stock is going down in price and it has gone down below the 50-day moving average and it is almost going to be touching the 200-day moving average right over here. So guys, that's the 50-day moving average. The moving average is a technical indicator used by traders to spot emerging and common trends in markets. It is a mathematical formula used to find averages by using data to find trends and smooth out price action by filtering out noise from random fluctuations. And when you do a stock analysis, a lot of people use the 50-day and 200-day moving average in most cases. That helps you to see where the stock is heading, whether it's going higher or lower. And you can see here from about May, in the beginning of May 2020, this stock was heading higher. It was going above the 50-day moving average. But then in November, it dropped down and it broke that pattern. And now it's moving in a diagonal or rectangular shape pattern because it's seeking where it should go, whether it's going to go higher or lower. It's within this wedge right here. And it will determine in the future where it will go. But right now we're in this horizontal rectangular shape and it is yet to be seen if this is going to be going higher or lower. Moving average is used in trading as a simple technical analysis tool that helps determine price data by customizing average price. There are many advantages in using a moving average in trading that can be tailored to any time frame. You can even use this for a 20-day moving time frame if you want to make it shorter, or if you want to use the 200-day moving average, it gives you the bigger picture and that shows you the trend where it has been before and where it is going right now. And a lot of people, like I said earlier, use the 50-day and the 200-day moving average to help them determine where the stock price is going. The moving average is the calculated average of any subset of numbers, using a technique to get an overall idea of the trend in the data set. Once you understand the moving average formula, you can start to calculate any subsets to get your moving average. It can be calculated for any period of time, making it extremely useful to forecast both long and short-term trends. The easiest way to use these indicators and to add them into your Yahoo Finance chart is just to go into your indicators column here and put in your moving average, and you can click 50-day and then also put 200-day and it will immediately put it in here. They have other websites like stockcharts.com that you can use. That's also another one that is also popular by a lot of traders. But I just like to use Yahoo. It's very simple and it gives me whatever I need. So using moving averages while trading can help identify trends and become significant in building trading strategies. If price action is above a moving average, it can be indicative of long positions, while if the price action is below the moving average, it can be an indication that short positions should be taken. Traders can use the moving average crossover method as a trigger into new positions. This method is one that is commonly used in trading strategies. So moving averages can provide a simple yet effective way to know what side of the market you should be trading that day. If it's trading below the moving average point, then this can be a clear indicator to take the short position. And then you can also change the interval period. So if you want to look more into a daily, like 30-minute interval, this gives you a more concise look into the pattern of the 50-day and 200-day moving average. So you can see here the purple line and the crossover of the green line. That's called a death cross. Whenever when the 50-day and 200-day moving average crosses each other, that is usually not a good sign, because when that happens, that means that the price will normally go down. And that's what happened right over here in December 8th. The death cross occurred, and then the price just dropped down, and then it went back up again just a little bit, and then it went way back down again on December 15th. And right now we're trading again, touching the 200-day moving average, but yet it is now below that, and now we are basically where the 50-day moving average is. So you can use different intervals. You can look at the 15-minute interval if you want a more detailed look at it, or you can also look at the 30-minute interval. You can also look at the 4-hour interval, and you can see here the purple line is the 50-day moving average, and there's that death cross that occurred right here, and then right there you can see how the price just went down, and it's been going down ever since then. So the crossover of the 50-day and the 200-day moving average is also called the golden or death cross, as I mentioned earlier. This moving average crossover method is one of the most commonly used trading strategies, with a shorter term SMA breaking through a longer term SMA to form a buy or sell signal. The death cross and golden cross provide one such strategy, with the 50-day and 200-day moving averages in play. The bearish form comes when the 50-day crosses below the 200-day, providing a sell signal. So when the 50-day crosses the 200-day, that usually is a sell signal, and that's when you need to get out of this stock and just wait and see what's going to happen. Conversely, a bullish signal comes where the 50-day moving average breaks above the 200-day moving average. So the converse also could be true. Whenever the 50-day moving average reverses and crosses back above this 200-day moving average, then we can see a bullish signal again on this stock. So guys, there you have it. I hope that helps you guys to understand the 50-day and 200-day moving averages, and that will give you some guidance as to where stocks are going based on these moving averages, and it will give you a bigger picture and a smaller picture depending on what you're looking for, and it will help you to trade stocks by making better choices than just looking at the stock price and what other people tell you whether you should buy the stock right now or not to buy the stock right now. These simple moving averages give you the direction of where the stock is going and where it is not going, and you should be able to make those calls and those trades based on those moving averages. So guys, I hope this was helpful for you, and I hope you got some content from it. Please like this video if you like it, and subscribe to my channel if you haven't already done so. I look forward to seeing you again on the next video. Thanks for watching.